everyone. Welcome to Collier's webinar session with the topic of Indonesia property market update for the second half of 2021, developers and investors session. Before we start our webinar, we have a few information in regard to our webinar session. The first one is that the audio and video for webinar participants are being disabled to avoid noises, and we will only enable audio and video for our panelists. This webinar is being recorded, and we will share the recorded files and presentation slides tomorrow. We will have a questions and answers session at the end of our webinar, but please free to type your question in the question box below. We also have received a few of your questions that you fill out with your registration form. And although we may have a limited time to answer to your questions, we will send the unanswered questions to your email along with the presentation slides. If you need any help with the webinar, please type your question in the chat box. Our webinar host will help you. And we will also send a survey link for you to fill out. We appreciate if you give your time to fill out the form so that we can enhance our next webinar session. So I would like to introduce you first to today's presenters. Our keynote speaker will be Bapak Mike Broomell, Colliers Indonesia Managing Director, followed by Bapak Ferry Salanto, our Head of Research, Bapak Steve Atherton, our Head of Capital Markets and Investment Services, Ibu Monica Koesnovagrill as our Head of Advisory Services, Bapak Bagus Adikusumo, our Head of Office Services, Bapak Rifan Munansa, our Head of Industrial and Logistics Services, and Bapak Sander Halsema as our Head of Retail Services. In September of 2021, Colliers Indonesia welcomed Bapak Satria as the Head of Hospitality Services. Today will be his first webinar with Colliers, and hopefully he can give insights on the hospitality sector in Indonesia. So without further ado, please welcome our keynote speaker, Bapak Mike Broomell. The floor is yours, Pak.
Thank you. Good afternoon, everyone. Welcome to our Colliers biannual webinar for developers and investors. I would like to present the property market updates for office, industrial, retail, residential, and hospitality for the second half of 2021. Our panel of experts will share their points of view regarding topics that impact the property types in which they specialize. As you might imagine, it is difficult for us to answer a question in which we are often asked, how is the property market doing? Of course, it depends on whether you are a property developer, an investor, or an occupier. And also it depends on the type of property that we're talking about. I would say, though, in general, the property market is currently very favorable for those who wish to purchase property, those that have cash, whether they're developers, investors, or occupiers. But of course, very, very difficult for those that are currently experiencing some financial difficulty. There are various asset classes which have been struggling through this pandemic. Of course, the asset classes, the impact of the pandemic has varied greatly depending on the asset class. Some have struggled, some have thrived. Logistics warehouses, data centers, and landed housing have been the stellar performers during this time. And they, of course, have benefited from the pandemic, the growth in e-commerce, and the working from home environment during the last 2 years. Over the last couple of months, though, we have seen encouraging signs of economic recovery, despite the panic over the Omicron variant, which doesn't seem to be that concerning for people, and I don't think should be. We're looking forward to a much healthier and more balanced property market in 2022 as the vacant space is taken up by occupiers and things are a little bit more normal. We do, however, believe that we'll still be experiencing difficulties during the next year because of the fact that various developers and property owners, because of the oversupply and the suppressed demand, have been struggling. We are hearing predictions that in 2022, there are going to be an increased number of distressed assets coming on the market as the lenders and vendors that have not been receiving the monies that are owed to them and which remain unpaid as those folks push to get their money back or to go through the PKPU process perhaps and take over the assets. So in that respect, I think there'll be opportunities for people with money, but various developers, I think, will be finding it a very tough market and may be forced to sell assets they would prefer not to sell. Anyway, I hope you will enjoy today's webinar and trust that our experts will give you insights that will benefit you and your company as they discuss the asset classes in which they're experts in. And if you have any questions, please do not hesitate to reach out to me or my colleagues, and we look forward to speaking with you further. Thank you.
Thank you, Pak Mike, for the keynote speech. So we're going to move forward to our first sector, which will be investment market. We will have Ibu Monica Koesnovagrill as the head of advisory services, followed by Bapak Steve Atherton as the head of capital markets and investment services. Ibu Monica and Pak Steve, over to you.
Thank you, Auntie. Okay, good afternoon. Year 2021 would be remembered with its unique position. On the positive point, Indonesia was able to leave the recession period with its positive economic growth. However, on the other side, the COVID-19 pandemic hit its hardest attack with its Delta variant. In third quarter, the severe attack of the virus dragged down the economic growth by 50% from the previous quarter, showing how important the effectiveness of the COVID-19 vaccine. Next. In mid-November, on average, 34% population was having full dose vaccine, with only 4 provinces recorded more than 50% having full dose or more than 70% having their first dose. Comparing to other countries in Southeast Asia, the percentage was lower. Yet, taking into account the huge Indonesian population, this percentage was considered good. Indonesian government targeted to have a minimum of 70% population having their first dose vaccine by end of December. Next. Should the vaccination program run well and no more variant emerge, economic growth is projected to achieve its highest from Oxford by 6.9% in year 2022, before it would become more stabilized at about 6% up to year 2025. Two other countries in the region projected to have high growth of 6% to 8% are Philippines and Vietnam. From government point of view, the projection was at between 5% to 6.5% for Indonesia. Next. Interest in investing in Indonesia has not decreased during the pandemic, or even could be stated high. The value of domestic investment peaked in 2020. This is for the last 10 years. As at third quarter, the value was recorded at 79% of full year investment value in 2020. And the value of foreign investment in 2020 was 1.6% higher than in 2019. As at third quarter, the value was also recorded at 79% of the full year investment value in 2020. Next. After for some period, investment was relied on domestic investment, in 2021, foreign investment started to have larger contribution. This shows an increased investment appetite to Indonesia. Next. Provinces in Java were still the preferred investment destination for domestic investment in 2021, mainly in the property and logistics sectors. Yet, foreign investment was more spread out to provinces outside Java, like North Maluku and Central Sulawesi, mainly in the metal industry. Next. There are several property sectors starting to gain their potential investment in Indonesia, especially in Greater Jakarta. Data center is one of these. With continuous increasing growth of internet user in Indonesia, further with the IT enhancement, demand for data center is also increasing. Nevertheless, in 2020, the establishment of data center was still centralized in Greater Jakarta. Lack of similar facilities in other areas, even in Java Island. No data center is developed in Kalimantan as the future capital city of Indonesia. Next. Greater Jakarta is the highest population density, with most areas recorded more than 3,000 population per square kilometer. In addition to basic needs, F&B has become part of lifestyle. It is then triggered off demand for cold storage facilities. As in year-to-date, cold storage facilities are developed mostly along the east and north corridor of Greater Jakarta to serve mainly areas with the highest population density of more than 10,000 people per square kilometer, namely Jakarta, Bekasi City, Depok, and Tangerang City. Next. To cater to young families for their first house, a house has been provided in more compact size. In general, a house along the East Corridor was provided in wider range of size than those along the West Corridor. In terms of pricing, a house along the West Corridor is offered at higher pricing. Prices are offered at a maximum of 1 billion rupiah. In summary, we have seen the light at the end of the tunnel. The question is, which direction having brighter light and how to go towards the light? Thank you.
Thank you, Bu Monica. So moving on to Pak Steve Atherton for the market updates.
Good afternoon, ladies and gentlemen. Thanks for joining Collier's webinar today. My comments will be focused today on the investment market in Greater Jakarta and Indonesia. First, when we use the term investment market, it can mean a lot of different things to different people. For landed housing developers and apartment developers, it can mean the individual private investors who have the capacity to buy one or more homes or apartments for investment purposes. And for the developers and owners of large commercial and residential and mixed-use complexes, it can mean big institutional, private equity, family office, and high net worth investors who have the financial resources to buy entire buildings, complexes, and portfolios. To date, the brightest segment of the investment market is the private individual investor, which is starting to buy landed homes and apartments. The less bright segment to date has been the larger institutional segment. While there is a lot of capital on the sidelines, either the pricing of the offers hasn't been good enough or the risk associated with extended unknowns makes the underwriting very difficult. Like, how long will it take for office rents and office occupancies to bounce back to earlier levels? Or when will healthy levels of luxury apartment demand return, backed up by confidence in the economy, higher user demand, and the prospect for increasing capital values? While we see rising levels of investment in many other gateway cities across Asia and North America, in some cases now equaling or surpassing pre-pandemic investment levels, we somehow find ourselves in a different situation. Our situation is more difficult for the large-scale investment sector because we were not only hit by the economic and the life and death tsunami of COVID-19, but we were already in an oversupplied, downward trending office and apartment market. We didn't just go into a bad market, we went from a bad market to a worse market. However, there are some positive signs. We see people have reached some form of pandemic fatigue, and they are ready for change, like getting back to the office. So getting workers back to the office and kids back to school will help us jumpstart a more normal work cycle where there is real demand again for offices. And there will likely be a knock-on effect where the rising office populations lead to rising apartment demand for users and investment, as well as rising demand for retail and hotels. So whether we end up working 3 or 4 days out of the 5 days of the week in the office, or we get back to full-time office, we believe the faster we get back to our new normal of office work, the faster we will find people looking for solutions to their commercial and housing needs. Definitely, some people will choose to buy and live in a less expensive and more convenient apartment development compared to a landed house located 1 or 2 hours from the city. And for those with more savings and higher paying jobs, some will buy middle, upper, and luxury apartments in convenient city center and fringe locations. And there will be others who choose landed housing and can live with the newer and better infrastructure, including improved public transportation on our new toll roads, LRT, MRT, and commuter trains. But either way, there will be higher demand for all kinds of property. Also, the government's extended VAT incentive through the end of 2021 has been a real positive boost for property investment, especially landed housing. Hopefully, this policy could be extended through 2022 to match the extension of Bank Indonesia's zero down payment program. While we've recently seen a small uptick in apartment investments, hopefully a further extension of the VAT incentive would help to motivate pent-up demand in the apartment sector. Fortunately, the Indonesia government seems to have managed the economy and the health policies during COVID-19 reasonably well. Fitch maintained a BBB credit rating for Indonesia with a target GDP growth for 2022 of 6.8%. Historically, when the economy grows, the property market grows with it, and user demand and investment rises as well. Next slide. At present, whether for local or foreign investors, the most favored property investment sector remain landed housing and logistics. Affordable landed housing priced from 300 million to 1 billion has the deepest, widest demand. But bank loan approvals for buyers in the lower price range can be hit or miss. Normally, loan approvals and transaction closures are more certain in the 1 to 2 billion rupiah price range. And while logistics is much in demand, the volume is still relatively small compared to other Asian gateway markets. We still have a lot of room for growth. For office, let's see how the market finds its way to new normal. We still have not seen pricing for existing operating office buildings at price levels that really motivate buyers to deal. Next slide. Where do we go from here? We do expect the hotel market to bounce back relatively quickly in terms of occupancies, with room rates to follow. Some owners of hotels have depleted cash reserves over the COVID period, so there are some opportunities for investors to buy hotels or shares in existing hotels or portfolios, which will provide capital for CapEx, room renovations, and expansion. We do expect the demand for TOD developments to rise faster than non-TOD, so opportunities to buy land or JV with landowners at strategic TOD sites is attractive. Cluster, landed, residential, and township development is the sweet spot, touching the greatest number of real users and real investors. There are opportunities for landowners to partner with capital providers and developers for largely self-liquidating developments with longer-term investments for the commercial and retail assets that serve the community. More and more foreign investors are keen to enter this space. Well, that covers the investment market for now. Thank you.
Thank you, Pak Steve, and thank you also, Ibu Bonika. To wrap up the investment market presentation, we have a poll, and we will need your help, the attendees, to fill out the poll or the survey. So the first one is we have 4 questions. The first one is, do you believe the COVID-19 vaccine program will help accelerate the property market recovery? And when do you think the property market will rebound? And the third one is, if you have 3 billion rupiah, which property investment would you choose? You can choose more than one answer. What type of and the last one, what type of location would you consider for your next development or investment? We will give 30 seconds for everyone to fill out the survey. Okay, so we're going to close up the survey, and our host will share the survey results. So this is the results, everyone. So I think 94% believe that the COVID-19 vaccine program will accelerate the property market recovery. A mixed answer in terms of when is the property market will rebound, and also a mixed answer in which property they would invest if they have 3 billion rupiah, and a mixed answer on location, but I think 43% choose apartment on TOD. So that's wrap up our poll. We will share with you the results also tomorrow. We'll move on to the office market. We have Pak Ferry Salanto as the head of research and Pak Bagus Adikusumo as the head of office services to share their data and point of view on the updates on the office sector. Pak Ferry and Pak Bagus, over to you.
Hello, everyone. Good afternoon. Thank you, Auntie, for giving me the chance to update on what is happening to the office market. So this is basically the review for 2021 and then our outlook for 2022. Yes, but as you can see from the chart presented here, I'll give you our forecast up to 2025. So it gives you a little bit longer expectation what will happen to the each of property sector. So I think quite a few of you, I think has been aware that office market has experienced an oversupply situation, and that's has been anticipated basically by most of the developer. And as you can see, as a result, 2024, 2025, we expect there will be no new development of office building, particularly in the CBD. But there's still some space expected to be completed at the same time. But what we are anticipating for 2022, as you can see from the left chart, there will be around 340,000 square meter of new office space available in 2022. Basically, this is coming from the previous years, the uncompleted building that are projected to be available in 2022. But as you can also see, in 2023, the amount of new supply will be quite limited. And as a result, 2024, 2025, none of the developer, I think, is planning to launch new office space. So that will help accelerate our occupancy up to 2024, starting 2023 and 2000 up to 2025. Next slide, please. Okay, in terms of base rent, this is again a base rent, but again, if you are talking about the transacted land, this should be lower than the asking rent. But if you can see from 2017 to 2021, the trend has been downward, and we expect this will be the bottom, the lowest position of rental in office, and we are expecting to see some rebound in rental next year, particularly because of the driven by the new influx of buildings coming over the next few years. So, and then from the selling price, we also see that the asking price has been relatively flat. But again, if you are talking about the transacted price, this should be lower than more than 15% because of the availability of office space is quite huge in the future. So that's all about the office. Over to Pak Bagus.
Thank you, Ferry. Thank you, everyone, for joining our webinar. As Pak Ferry has mentioned early on, office market is still in the oversupply situation. It continues compared to the first half. And then in the second half, rent and occupancy rate also continues to fall. And as Pak Ferry also mentioned early on that, yes, you've seen that the overall asking rent in CBD area is ranging from around 250,000 base rent per square meter per month. But now we have seen in the market when we did the transaction that the rent has dropped from 20 to 45% from the asking rent, depending on the size of the office space. And then because of the oversupply situation, generally the market continues to be tenants market. So it is an opportunity for tenants to achieve a competitive rent if they want to relocate or renew. And that has been continued since the first half of 2021. And also what has changed compared to first half 2021 to now second half, we start seeing a lot of companies have increased confidence about their businesses. And then in the last few months, we have received so many inquiries for new office space. And this has become a very good sign of market recovery. And this is likely, we believe, to continue in 2022. And then as far as major occupiers of office space, it's no longer oil and gas and related companies, but mostly dominated by technology-related industries, consumer products, logistic businesses, telecommunication, and also government-related companies. Next, please. Now, as far as strata title is concerned, certain owners start considering selling at current market price. As previously mentioned by Pak Ferry, that overall price is ranging from around 40 to 60 million per square meter price for strata title. And then if certain owners consider selling at market price and market price has dropped, normally between 18, not normally, currently the strata title market price has dropped from 18 to 30% compared to pre-COVID prices. So the numbers that Pak Ferry mentioned, 40 to 60 million, depending on the size as well, dropped by about 18 to 30%. Now, there are still many vacant strata title space available though, either for sale and also for lease. So you can imagine the lease space is already a lot in the market, but now we also have vacant strata title space available for lease as well. Now, strata title space owners generally would lease the space at a very attractive rents. because when you own strata title and it is vacant, you will have to pay the service charge. So in order to optimize their asset and avoid paying the service charges, right now, strata title owners would lease the space at a very good rent. Next slide, please. As mentioned early on in the first slide, that companies generally have gained confidence because majority have accepted the current pandemic, have adapted to the pandemic condition. So because more and more companies have adapted, they're running their business according to the current condition. So we start seeing company expand by either staying where they are or move to a new building. And also because of the working from home for so many years, many companies generally, when the lease is up for renewal, they decided to reduce from 10 to 30%. And then the second half is better than the first half, because in the first half, we experienced companies reduce up to 50%. So now as pandemic, COVID-19 is generally manageable, and then a lot of companies go back to the office, and then 75% capacity is allowed. So now more and more people going to the office. So companies in general now, when their lease is up, reduced by about 10 to 30%. And then it is unavoidable. Many companies have decided to apply hybrid workplace models. So 50% working from home and 50% working from the office, or more working from the office and less working from home. But at least hybrid business models seems to be the answer right now, and it may be going forward for the next few years. And because of this, because of working from home and working from the office, it is unavoidable as well that a lot of companies redesign their current layouts, providing more hot desking, so more mobile desks compared to the fixed desks. So directors level that used to have offices, closed offices, but now they're all going to be in the hot desking. And then one thing that has changed as well from the first half to the second half is that companies generally no longer perceive relocation as big risk to their business. So because they have adapted, they have accepted the current condition, so they decided to execute the relocation plan. So companies nowadays, because of the oversupply situation, it is their market, so they started to execute the relocation plan seriously if the deal is right, because they're taking advantage of the market situation. And then also a lot of landlords nowadays have assessed the market and understand they need to be flexible, so offering very good terms, including tenant fit-out allowance. Next. Now, I just would like to share with you what are the reasons for companies to relocate their office during pandemic. So we've seen the companies that have been in the same building for many years because they have adapted to the current pandemic situation. They've been in the same building for many years, so they take advantage of the market, they move. Another reason they move is because of the current situation of their building. For instance, the building is under build, operate, transfer. So the new owner, the tenants are not comfortable whether the new owners is going to continue running the building as commercial building, or the quality of the building management. So those kind of questions make them move to the other building, or the building is to be demolished. So even though the market is challenging right now, but we still see some deals whereby the building will have to be demolished and then build a new one. And another reason is they wish to expand their business with caution. So they still require expansion. So technology-related business, consumer product-related business, logistic-related business, they expand their business with caution. And then the last one is they have decided to consolidate their operation. So they've been in the several office buildings because they have adapted with the COVID-19 condition. They decided to consolidate and take advantage of the current market. Next. Now, what are the strategies and opportunities for 2022? As I mentioned early on, landlords in general in Jakarta market have assessed the market, so they understand. So we advise the landlord to continue showing flexibility and be accommodative to keep the tenants to extend the lease, or even more flexible to secure new leases, because it is unavoidable because of the uncertainty, the current condition, tenants require lease flexibility. So there has to be some win-win solution in terms of the negotiation between tenant and the landlord. Now, flexibility could be offered in a lot of different incentives in the form of rent-free, parking-free, option to surrender. Some tenants also ask for early termination option, fit-out allowance, because of this current pandemic condition is global. So if they move, they require asking for head office approval in New York, in Europe for their fit-out. Because they are also having their problem, most likely they will not get the fit-out approval. So the good thing is that some of the landlords here are okay to provide the fit-out financing or capex. And an option to renew with rental cap is also another thing for the incentive, sublease and assignment, and also holdover rights. And then landlord nowadays also should focus more on achieving occupancy rates. And then landlords should allocate some areas for agile working spaces in their building because of the lease flexibility. So some tenants does not take a lot of space nowadays, they take enough space, but and when they win the project for their business, they would rather take agile working space in that same building. They will sign for 1 or 2 years after the project is done. And then if they get another project, they also take another flexibility workplace strategy for their requirement. Then another thing that has become quite unavoidable and also a requirement for many companies is that they would like to go to the building where it supports sustainability. They would like to go to the building that have green building certification. So that's also another thing that should be considered when tenants are looking for buildings. They would like to go to the green building, the building that has green certification. That wraps up our my presentation. Thank you. Back to you, Anti.
Thank you, Pak Bagus and Pak Ferry for the presentation for office sector. We're moving on to the retail market or the retail property sector. We still have Pak Ferry, and we will have also Pak Sender Halsema as the head of retail services. But before we move on to the presentation, we have also a poll for you to fill out. And we will also give another 30 seconds for everyone to fill out the poll. It might be less because there's only 2 questions. The first one is, are you still providing your retail tenants with rent service charge rebates? And the second one is a revenue sharing rent structure. Is that something you're seriously consider providing? We'll give 10 seconds. Okay, thank you everyone for the answers. We will share this answer in our email to you tomorrow. So we'll move on to the presentation. So Pak Ferry and Sender, the floor is yours.
Thank you, Auntie. Okay, now we move on to the retail sector. Unlike the office sector, the retail supply has been grown quite moderately supply has been quite moderately. If you can see from the annual supply in the below chart, you can see that our expectation for supply has been quite moderate, below 100,000 square meter, and that will help increase the occupancy starting in 2022 a little bit and going forward. And basically the key for retail business is that it needs people, traffic, and people mobility. So meaning that when the pandemic can be controlled and people are freely going to the mall, we hope that a few stores will reopen, and that will help occupancy to go up again over the next years. Next slide. Okay, in terms of the average rent, we see that rent has been adjusted quite a bit in this year, basically, mainly because it's triggered by the operation of Pondok Indah Mall 3, and that's improved the rental tariff above the market average. And then also that mall visitor has been quite gradually on an upward trend, despite still lower than in the normal time. But this is a good sign. People has going back to the mall again over the last few months, especially after the PPKM ended in August this year. And in general, landlord maintain the service charge tariff, but the overall adjustment, again, it's because the influx of newly operating mall, like Pondok Indah Mall 3. So basically, Pondok Indah Mall 3 contribute to the increase in the overall rent and also the service charge, because the segment of this mall is upper class mall. And then we also expect that rent and service charge adjustment are likely to increase moderately in next years, but again, that's depend on the economic projection. If it achieves the target, I think we'll see that will happen in 2022. Thank you.
Thank you, Pak Ferry. We'll move on to Sander.
Hello, good afternoon.
Good afternoon, Sander.
Hey, Antti, would it be possible to quickly pull up the answers of the questions, or is that?
I think we already moved, Sander.
Oh, okay.
Sorry.
Anyway, thank you, Antti. I'll give a short overview of the retail market today. As the COVID situation here in Indonesia seems pretty much under control for now, and let's hope that will stay that way, we see positivity returning in the retail market. So for landlords, this is obviously a relief, as rents and service charges could return to normal again. However, there are some exceptions because cinemas and other entertainment providers are still not allowed to operate at 100% capacity. And so this is really a retail segment that still needs support from their landlords in terms of rent rebates and flexibility on payments. As a result of the pandemic, many retailers from all segments had to review their portfolio of outlets, obviously, and close stores. And so some landlords are still working on finding replacement tenants in a soft market where retailers know they can get more favorable commercial terms nowadays. And so many retailers are really getting active again in terms of expansion to reap the benefits of this soft market, while remaining to be a bit cautious, of course, and selective in terms of the locations that they take up. This is the main reason why we still see a lot of vacancy of retail units at office complexes, for example, where it's much harder for landlords to find new F&B retail tenants. Well, obviously they want to provide their office tenants in their complexes good facilities and restaurants so that the tenants can have a proper lunch. But that's a bit difficult at the moment. And so many retailers, especially F&B retailers, feel the market is still very vulnerable, and uncertainty remains if a new COVID outbreak will happen in Indonesia, causing people to work from home again. And so they prefer to open really at standalone outlets or at malls over office locations. We do feel, however, that if the situation remains to be stable and an increasing amount of people will work from their office, it will definitely become a good option for F&B retailers to open up at office locations again. The next slide, please. So overall, we feel there's a lot of positivity in the retail market at the moment. Indonesia's sales growth is projected to be positive compared to last year, although sales is of course not yet back at 2019 levels. It's going into the right direction. And luckily, the planned stricter PPKM measures seem to have been cancelled by the Indonesian government during the upcoming holiday season. And this is obviously a very positive thing for everyone involved in retail. Mall visitation, like Ferry has also mentioned earlier, has also improved significantly, especially during the weekends. And most major malls have been very crowded for quite some time now. And on the retailer side, we also see positivity, where major international and national retailers are pushing to expand in Jabodetabek and other cities here in Indonesia, like Surabaya, Semarang, and Bali. They're looking to open standalone stores, serving consumers both off and online. And as stated, I think I mentioned that in the previous webinar in July these stores will be used as fulfillment centers as well of online orders. And of course, all the major retailers are also looking at the malls, different malls available in the cities outside of Jabodetabek as well. Another positive signal is the interest of foreign retailers to open in Indonesia. During the pandemic, we saw Taco Bell and Subway, among others, opening as new brands here in the country. And obviously the market size and the growing middle class in Indonesia are reasons that make this country very attractive for many foreign retail companies that have not opened up here already. Usually they look at the growth and performance of international and local retailers in similar segments active here, or at retailers from their respective countries. And they see that regardless of the pandemic, they continue to expand and invest in Indonesia. And we also ourselves, based on the numbers of requests that we receive from foreign retailers at the moment, we're quite confident that more strong and exciting retail brands will open here in Indonesia in coming years. Next slide, please. So flexibility towards retailers is required, or still required, I would probably have to say. Like I said, many retailers are starting to expand again, but they're also very selective and more cautious to open new outlets. And hence some flexibility is still required from the landlords to attract new retail tenants. Flexibility can be offered in many different ways. It can be offered by providing incentives such as lower down payment, percentages of down payments, or providing facilities. This is mainly for standalone locations, I would say, but we see a lot of retailers demanding that the AC and the genset and the required electricity capacity is provided by the landlord. And apart from those practical requirements, retailers expect more flexibility from their landlords on exit clauses, for example, which is partly, of course, due to the pandemic that we went through the last years. And finally, some retailers expect capped rental increases in their contract in case of a renewal or extension of their lease. Another thing I did mention in our webinar last July is the fact that we continue to see a growing number of retailers demanding revenue share structures. So why it would have been good to see the results of the poll today. But anyway, most landlords are still skeptical towards this model here in Indonesia, but it's something that we feel needs to be discussed internally. And issues we see arising when having conversations with landlords on revenue sharing structures is really how to, they ask questions on how to verify if the submitted revenue numbers by the retailer are correct, and how to handle online sales, for example, and whether that online sales should be part of the offline revenue or not. So retailers will say that it shouldn't be part of the offline revenue, as it's not a purchase that is done in the actual store, but rather a fulfillment of online purchases. And apart from that, normally these retailers will pay a percentage of their revenue in fees to the application through which the order is made. So fees have to be paid to Gojek, for example. So it's a very complex issue but it's also an issue that we feel will become more relevant in the future as we see an increasing demand from the retailer side on revenue share structures. And finally, my final remark for today, outdoor F&B space is something that continues to be important as Indonesian consumers have become accustomed to spending time outside during the pandemic. And so for landlords, it should remain to be a point of interest to try to accommodate outdoor space for retailers, for F&B retailers and their consumers. So that's in short, a little overview of the retail market in Indonesia and an outlook on 2022. Please reach out to me if you have any questions or want things clarified. Thank you very much.
Thank you, Sander, and thank you, Pa Ferry. We're going to move to our next sector, which is industrial and logistics. We still have Pa Ferry Salanto, of course, followed by Bapak Rifan Munansa as the head of industrial and logistics services. Same like the previous sector, we still have a poll. We would appreciate if you can help us in answering the poll. Only 2 questions. We'll give, I think, 20 seconds. The first one is, other than Greater Jakarta, which is already well established, which areas do you consider will have the potential to develop in the near future? The second one is, if you have planned to develop an industrial estate, which areas do you think have the best growth potential? You can answer more than 1 answer. We'll give 10 more seconds. Okay, maybe we can share the results, just a quick overlook of the results. So industrial and logistic is West Java is still the first one. And for the second question, oh, it's almost a tie for Subang, Patimban, and Batam. Okay, so I think we can move on to the next sector. Pak Ferry and Pak Rifan, over to you.
Thanks again, Anti. Hi, this is about the industrial market. So first, we talk about the land absorption during 2021. So our expectation basically is higher than 2022, and it seems that it could reach the performance happen in 2020, I mean, and because we still has not been recap the result for the fourth quarter this year. So we expect to see that the total number of land absorption should be higher than 22. So that's basically indicate that this market has been performing quite well, and we believe that starting to 2022, this should be the momentum for industrial to improve better compared to the other sector. So what happened here during 2020 this year, the total land absorption has already achieved about 70% of the total sales of last year's, and the biggest contribution coming from the electric vehicle manufacturer of Hyundai for the battery module, and that's happened in Karawang. And apart from that, we also see that the data centers is quite aggressive, and I'll show you later in the next slide. Next slide, please. Okay, as you can see on the right chart, this is the active sector up to basically this data from the up till to third quarter 2021. About more than half of the total transfer are coming from contributed from the automotive industry, and then the second one will be data center, and we expect that data center will still contributing to the sales for next year's and a few years ahead. In terms of industrial land prices, basically what happened here, the adjustment of prices is basically coming from some of the overperforming, not overperforming, basically from the industrial estate that sells with good sales. So they are trying to adjust their land price, but again, it really depends on the performance of the estate itself. And we expect, as I said earlier, we expect to see that the expansion of data center industry will continue on in the next few years, and that's also followed by other traditional industrial sector like the logistic, and then petrochemical based industry, food, health industry, pharmacy, and FMCG. Yeah, I think that's all from me. Over to Ripan.
Okay, thank you, Pak Ferry, for the industrial market outlook, at least on the second half of 2021. Good afternoon, and thanks everyone for joining this webinar session. In this opportunity, we would like to give you an update regarding industrial market as we are already at the end of 2021. We all know that the current pandemic condition in Indonesia is getting better, and Indonesia actually starts to open for people to fly in and out of Indonesia. Even though right now the industrial land sale is still relatively low and flat, but toward the end of the year, we have seen a sign of recovery. We believe as long as there is no third wave pandemic, the 2022 industrial outlook should be positive and improving significantly. Based on our observation, here are some of the highlights of the most recent industrial market conditions. Like explained by Ferry, that the demand for data center is still ongoing in the market and it's quite high. As we can see in the charts that the internet users in Indonesia are increasing from time to time. In this chart, we are using 2015 to 2020. As a result, the data center companies are still searching for the right property in terms of location. As we can see from the charts, data center is still concentrated much in Jakarta and West Java, especially Cibitung to Karawang area. This is actually due to the establishment of the existing data center infrastructure in this corridor. Next. On the next slide is actually, we're going to talk about the traditional warehouse, logistic operation, and demand for fulfillment center. Unlike the demand for industrial plot, the demand for warehouse space, either traditional or modern warehouse, is increasing from time to time regardless of the pandemic. It comes from FMCG, e-commerce, and the end users such as factories. Recently, we have seen an increase on the demand for automation warehouse from FMCG companies. Traditional warehouse, as we know, usually uses selective racking system, while there is a requirement for the major FMCG to replace it partly with radio shuttle racking system. Using this automation racking system can be more efficient since it will not heavily rely on people to operate it manually. It will end up actually require less warehouse space compared to the traditional racking system. Even though it is a heavy investment at the beginning, but in the long run, it will make the logistic cost much more efficient and stable. The other one that we found out in the market is fulfillment center and express or courier, especially e-commerce. We know that their business is C2C, which is e-commerce company, basically only provides the platform. Lately, e-commerce companies start to switch their business model from C2C to become B2C. As a result, they will need a fulfillment center to store the goods before delivery to customers. By doing this, e-commerce company can make sure that the delivery of goods to customer will be on time and they can control the service quality. However, actually we have seen in the market that express or courier companies starts to expand their service, not only for courier, but also act as a fulfillment center as well. So therefore, we have seen an overlapping of these two. As the targeted area for e-commerce still over at the south, and recently there's significant demand on the west area, which is, for example, like Dan Mogot area. This is actually in line with the location of the e-commerce customers and the high population area. Next. As for industrial estate that are supported by government, this industrial estate would be attractive to new investment in Indonesia, especially when we are competing with other countries in the region, such as Vietnam. Industrial estates, for example, like Kawasan Industri Terpadu Padang, Batang, which is supported by the government, offers a very competitive land cost. And even the term of payment is very good. As we know, we understand that the companies just need to pay a certain amount of down payment, and the remaining payment will be payable at the beginning of year 6. This is very attractive and very competitive. The industrial estate also have a good infrastructure because the government basically developed the infrastructure. The other thing is special economic zone or kawasan ekonomi khusus, KEK, which is a lot of industrial estates would like to have this status because this is going to benefit the investors. Several industrial estates actually have already applied and now actually already got and become the special economic zone. Our understanding is it will offer a special, like a tax holiday for a certain type of industry. Next. So in summary, with the positive signs of recovery to enter 2022 as a developer, how to win your market. The first one, the most important thing is the technology, because I think, like it or not, we have to catch up with the technology. The traditional industrial estate, as we can see right now, slowly is now evolving to become like a smart industrial estate, which is at the end will be transforming to the industry 4.0. Second is the globalization, which is forcing us to compete with not only the local market, not only focus on the local market, but also in the region. The perfect example is we are always in direct competition with Vietnam, India, China, which is this other region may offer lower land price, more government incentive, and also cheaper labor cost. And then the last one is you need also to upgrading your industrial estate infrastructure, which is a potential buyer, for example, such as a data center will require a good infrastructure. For example, you should have a good electricity supply, at least 2 sources, and then enough electricity capacity, reliable electricity and data connection, water supply, and etc. Therefore, the industrial estate now is not only serving for the factories, but also wider type of tenants, such as data center, warehouse, research and development. That is all from me. Thank you. I'll give it to Andi.
Thank you, Pak Rifan and Pak Ferry. So we're moving on to the next sector, which is residential market and apartment specifically. We have Pak Ferry Salanto and also Pak Steve Atherton, who will give their insights on apartment market. Pak Ferry and Pak Steve, over to you.
Thanks again, Nanti. Okay, our focus now is on the high-rise multifamily project, which is apartment market. as Pak Steve earlier mentioned that he's quite bullish with the resident mass market, especially for the landed houses. But unlike residential market, the apartment is more to investor type of buyer. In our data, about 60% of the buyer are basically investor type of buyer. So that's basically explain why the sales are not really as good as the landed houses. In terms of supply, we are quite this is typo. There are no projects being introduced in 2022, and we expect to see that total apartment project being handed over will be around 3,383 units, and that is higher than what is achieved in the previous year. But again, this number is basically very low compared to the previous years before the pandemic happenings. So that's basically reflect the confidence in developer to complete or to finish their new project. But if you look at the figures for 2022 next year, the number of apartment being scheduled to complete will be back to normal again. So that's basically reflect that the confidence will be back again next year. So I think that's also will follow with the good absorption as well. Next slide. Okay, the take-up rate. This is the take-up rate for the strata title units. But again, if you look at the total supply, the total take-up rate, that's not really showing a good number. Since 2019, it increased very slightly. But in 2022, we expect to see more units being transacted, hopefully. And then for strata title, for service apartment, we also see that the occupancy dropped quite a bit since 2019. That's particularly because the lack of the traditional lessee, which is coming from the expatriate market. There are tendency that expatriate coming to Indonesia has been quite few. So that's impact to the overall occupancy. But we expect, of course, for 2022 to see more expatriate coming back to the country, and that will help increase the occupancy rate for the next few years. Next. In terms of asking price, as you can see, the prices since last year has been flat. There is no changes. And this is again the asking prices. So in terms of transacted, that should be a bigger discount compared to the situation before the pandemic. But we expect to see more project coming in with higher prices, so that will help increase the overall prices over 2022 onward. In terms of rental rate, again, this is in the same trend with the occupancy. We see here the rental rate has been dropped quite a bit from 2019 to 2021. That's basically because of the lower occupancy happenings for the last 2 years. But again, we expect to see a rebound starting next year with the expectation that expatriate will be coming back to the country and economic activity resumes. So that will help continue accelerate the rental price up to 2025. I think that's all from me. Thank you.
Thank you, Pak Ferry. So we're going to move to Pak Steve Atherton.
Good afternoon again. So for the apartment market, As the COVID-19 pandemic gradually subsides, office workers will be less and less afraid to return to the city center, which should help restart the demand for all types of apartments in locations convenient to work, especially those which offer a more balanced and aspirational lifestyle. Given the lessons learned from COVID-19 and our 2-year experiment with work from home, the big surprise was that for many industries, work could actually still get done from home, and sometimes at very high productivity levels. However, as we all probably experience through our frequent Zoom meetings from home, there were also distractions and kids at home that challenged many as well on their ability to balance work and family. For many, there was this new realization that spending less time commuting and more time at home with family was a big game changer. They spent more time and reconnected in deeper ways with their kids and felt like they achieved a better work-life balance. But it also got boring and lacked variety. So there was some other realizations around the possibility of finding some better kind of work-life balance. So now, as employers are asking office workers to come back to the office, this is where it gets interesting. What will be the solutions to achieve the new, better work-life balance? Will people work 3 days a week in the office and commute from their landed homes in Jakarta and Greater Jakarta, getting back to longer commutes and longer days for 3 days out of the week? Or for the sake of convenience and less commute time, whether they work 3 days or 5 days per week in the office, will they choose to live in the city center or a place convenient to work? Perhaps people with young families will make longer term decisions and choose to live mostly in landed housing near the schools and activities of their children, whereas singles and preschool families will choose the closer and more convenient options. And there's also the empty nesters who are still working. Kids are grown and they don't need the large house anymore. So buying an apartment in the city or fringe and taking the MRT to work or a short ride may be very attractive. We believe with a growing economy and rising consumer confidence, all of these scenarios will start to play out, and this should fundamentally restart the stagnant apartment market. In recent quarters, while the overall landed housing prices have shown some gradual increases, the apartment prices have either just held ground or lost ground. And this is a reflection of the continuing wait and see mindset of many prospective apartment investors. Again, as the restrictive COVID-19 policies wind down, the reopening of marketing galleries and show units should help to boost apartment sales. There's also been some modest success in the last few quarters through more effective use of social media and online channels. For the most part, apartment projects with ready stock are competing better than under construction projects, as they can offer VAT incentive. But still, only around 200 apartment units were absorbed in Q3 2021. Perhaps if the government extended the VAT incentive to include apartment projects under construction, not just standing units, this could create an incentive for investors to buy apartments and help further revitalize the sector. Next slide. So what's changing? Well, companies like Airbnb are seeing guests travel for longer durations, travel to more locations, and stay in a wider variety of accommodation. Airbnb says plus or minus 20% of their lodgings are getting booked for 1 month or longer. This is the type of activity we've been hearing about, where workers have been booking longer stays in places like Bali and working from their hotel or Airbnb villa. If this behavior continues, there could be long-term demand for different types of accommodation that include homes in interesting locations that can be rented for longer periods. And this could also be extended to the apartment market. Now, landed housing developers are targeting millennials, which make up around 30% of the market now. And many millennials are showing some preference for landed housing near transportation and attractive supporting facilities and activities versus targeting homes in the city center. Apartment developers will need to focus their attention on the types of apartment products offered, the pricing, the facilities, the amenities, the activities, and the like, which will entice millennials. Perhaps aspirational products that offer impressive common areas, the wow factor, amenities, and cool atmosphere can attract millennial buyers and users. Young people are looking for experiences. So developing a product that offers unforgettable experiences, very positive experiences, will be in high demand. Consequently, this experience type offering will not only be the physical product, but also the services, the sense of hospitality and connection that come with the product. As the pandemic subsides, it is expected that more developers will restart uncompleted apartment projects or launch new projects, thus creating more supply. This will require pre-sales or bank financing, and neither will come easily. So the developers with the strongest track record and financial strength will find it easier. With Q3 COVID emergency restrictions, even serviced apartments experienced around 6% drop in average occupancy in Q3 2021. However, medium to long term, service apartments should continue their overall higher performance in terms of rental per square meter. Next slide. Strategies going forward for the apartment market. For next generation of top tier apartment projects across the price spectrum, locations near TOD or locations near existing larger projects and mixed use areas where infrastructure, facilities, shopping, restaurants, and activities are already built and accessible will be attractive opportunities. Build to rent multifamily strategies like co-living or student housing with offerings that have aspirational appeal to lifestyle, activities, and experiences will be a new trend. There are no real market leaders at this time for co-living or more institutional quality of student housing, so the field remains quite open and untested. For multi-tower strata title apartment projects, developers should consider partnerships with traditional service apartment operators for whole towers or franchise deals with hotel brands that can deliver viable service apartment platforms. And lastly, branded residences that offer high quality and the prestige of globally recognized brands will become more highly valued and should be top performers in the market. Well, that wraps it up for the apartment market. Thank you.
Thank you, Pak Steve and Pak Ferry. And actually, we have a poll too for apartment market. So we're going to need your help to answer the poll questions. There's two questions and we'll give you 20 seconds. The first one is, when do you think the apartment market will come back strong in Jabodetabek? And the second one is, which apartment sector are you most optimistic about? You can have more than one answer. Ten more seconds. Okay, thank you, everyone. Maybe you can share and just a quick look on the results. Okay, a tie between the second half of 2022 and the first half of 2023. And also, there's a slight difference, the 60% middle upper apartments near MRT and lower middle apartments near LRT station. Thank you, everyone. Now, the last session for today, is our hospitality markets, and we have Pak Ferry Salanto as the head of research, followed by Pak Satria Wei as the head of hospitality services. Pak Ferry and Pak Satria, over to you.
Okay, thanks again, Anti. Okay, this is our last session for hotel sector. And as you can see, I think from the supply side, the problem with the oversupply situation has been resolved with moderate growth over the next 4 years. So it means that we expect to see a better result of occupancy going forward. And of course, since the pandemic, this sector is one of the sector that hit bad by the pandemic, because number of guests has been reduced quite a bit, especially in the resort hotel area like Bali. Occupancy has been down for as low as below 5%. In some business area like Jakarta and Surabaya, occupancy has been around 10% at a time. But because of the staycation market, that's really helped the occupancy to gradually increase over 2020 and 2021. But again, the second wave of COVID, that's again hit the overall hotel occupancy quite a bit, and that's really a bad time for hotel market. But again, in terms of supply, we don't expect to see more supply coming in. Only a few projects in the pipeline, and that will be a good sign of recovery for hotel, especially when the economy returns, and then the confidence, especially from the business, resume. That will help increase the overall occupancy of hotel. Next slide. Okay, as you can see, again, 2020 was the worst performance of the overall hotel market. We expect to see a gradual increase, especially by end of 2021. We start seeing that hotel now is getting more guests, especially driven by government spending. We see a lot of events and meeting and something like that are coming basically from the government. So that's basically helped lift the overall occupancy, and we expect to see occupancy will be at about 50% by end of this year. And they will and we are also confident that occupancy will grow higher and back to the normal rate, until 2025, about above 60%. And with a more controllable spread of this COVID-19, we expect to see next year will be the momentum of the hotel industry to rebound. And that will explained by my colleague, Pak Satria, in details. Over to you, Pak Satria.
Thank you, Pak Ferry. Thank you so much. Hi, everyone. As what Pak Ferry mentioned previously, that the average room rate and the occupancy is going to rebound soon. We have seen the progress already by previous months in the last 2 or 3 months. But before to come to that conclusion, I would like to share what we see is the one that is going to be happening in the next 1 or 2 years. But before that, I would like to show you what is the numbers that we have been achieved in 2019. This the projection for the hospitality is still focused on the domestic buyers. If you see that the domestic buyers in Bali and Jakarta is increasing tremendously, especially in Jakarta. If you see this is the numbers that we try to collect in the last 2 years. The growth of the domestic market into Bali and Jakarta is big. The next slide, and also the composition on the market that having by all of the hotels, we were predicted that the transient is still going to be the highest percentage of the occupancy, while the transient is consists of the staycation, of the FITs, and also of the activities of the individuals. Meanwhile, the group and MICE are on the second position. Especially now we see, especially in Bali, that the group of MICE is increasing. We are expecting to have better increasing by next year. We are not projecting as much as what we are able to achieve on 2018, while the 2018, the performance of Bali are the highest for the past 10 years. But the positive is there. The market is coming back. We just follow what our government is planning, because I would like to share to you what is going to be happen. So on the next slide, on Jakarta's hospitality outlook, especially this is going to be happen on business hotels. The MICE business is still going to be very dominant. On the previous 2 or 3 months have been increasing a lot, especially after we get a special event on the second wave for COVID in July and August. But we see, and in fact, there is difficulties to find rooms now in Jakarta and Jabodetabek. The government segment is still providing a numbers of occupancy, especially on weekdays, followed by the corporate sectors. It shows that the business is there. You can see the traffic is there. You can see the distribution is getting heavy and so on. And the third item that we would like to emphasize is that the new customer habits it has to be accepted. Most of the hotels actually, and not only the hotels, but most of the hospitality services, hotels, restaurants, and also other services, they are prepared for that. They are changing their habits, they are changing the facilities, they are changing all the instruments to make sure that the indicators that we would like to see is positive. The increment of the occupancy in the hotels and the ADR of the hotels is there already. The increment of the average spending per cover in the restaurants, not even in the big restaurant, but also in the small restaurant, even warung, the numbers of spending are there. So it shows that the business is back. The next slide. This is also happened in Bali, especially in leisure. Not only in Bali, but it's happened in throughout leisure hospitality services, Yogyakarta, you can name it, Banyuwangi, Jember, Bali, Labuan Bajo, and the others area. The incremental of the occupancy and ADR is there. Even the numbers of flights that is flying to those destinations are increasing. First is, of course, because the government is planning something very big on next year, which is we all knew that the MICE event on 2020 is going to be focused in our leisure destination. not only Bali, but it's going to spread to the associate area of Bali, including Lombok and so on and so forth. And it's going to affect not only the businesses in Indonesia, but also in Southeast Asia. Bali and Jakarta is still going to host a lot of important meetings. We know that the biggest events that we have been heard many times is that the G20 is going to be there. The pre-meetings have been in place in Bali last week, so it's going to be there throughout 2022, which is going to be good for our leisure market. And not only that, actually, the revenge tourism that we see, the numbers of travelers, the numbers of domestic people who are traveling not only to Bali but also to other destinations like Danau Toba, Borobudur, even East Sulawesi and so on is increasing. So we see a lot of incremental occupancy. This is not only because of the events, but also because people now are hunger for the refreshment, especially by the end of this year. Next slide. We all know that PPKM 3 have been cancelled a few days ago, but the government mentioned that there will be pembatasan kegiatan masyarakat. So there's still protocols that we need to follow. Is this going to reduce the economic activity again, especially in the hospitality? But within the last 2 days, actually, we have been monitoring the numbers of bookings and numbers of travelers to Bali, to Danau Toba, and to Yogyakarta. It shows the positive response of the cancellation of PPKM 3. Is this good or bad? Actually, this depends to what we as the industry sees. Actually, to bring a positive impact to the business, definitely. It shows that the numbers of booking is increasing right now, but we have to be more careful, because if we miss these 2 weeks, then we're going to miss the whole year of 2023. This is the one that we and also our government will not expect it. We are trying to protect the tourisms for this the next 2 weeks, to make sure that the whole 2022 will be in a very good moment for all of us. That's all from hospitality. Back to Anti.
Thank you, Pak Satria. And we still have one last poll for hospitality. And we still need your help to fill out only 2 questions. The first one, as a hospitality developer or investor, where are your current hospitality assets located? And the second one is, what type of hospitality assets have you invested in or own? And you can have more than one answer. We'll give you 10 more seconds. Okay, thank you everyone. And host, can you please share the results? Okay, so most of the current hospitality assets located in Jabodetabek and Bali, 70% is in Jabodetabek, and type of hospitality assets, so 71% is hotel. Okay, thank you everyone thank you Bapak and Ibu for the presentation. We're moving on to the question and answer session. We have received quite a lot of questions. Unfortunately, we're running out of time. So I'm going to go straight into and having choose one question per sector. But don't worry, as we promised, our experts here will answer your question via email. So for everyone who's already sent out your question through the registration form or in this session, in this webinar, we'll send you the answer through emails because we already have your email. So to the first question from for Pak Steve, in terms of investment sector, came from Bapak Mustanir Afif. In terms of vaccination, Pak Steve, we do really hope that the local property market will be rebound next year. But however, there's a concern about the Fed adjustment. Will it impact the local property market due to that regulation, Pak Steve?
Auntie, could you repeat that? Are you talking about the VAT incentive?
No, the Fed, Pak. The Fed.
The Fed policy? The US
Yeah, I think,
Fed?
yes. Will it impact the local property market?
I don't think personally it will have a great impact on the local property market. I think the U.S. Fed is dealing with interest rates that have been very, very low for a long time, and they're dealing with the recent bout of inflation. So they're going to try to manage that by restricting the money supply in the U.S. economy and try to get some control over inflation in the U.S. economy. I think it just touched over 6%, which was the highest in a long time. But personally, I think we've got other battles to fight here in Indonesia on getting the investment market back on its feet. I think it's more about consumer confidence, vaccination rates high, travel corridors opened up, people moving around, getting back to the office, getting back to normal.
Thank you, Pak Steve. Thank you for the answer. And for Ibu Monica, Bapak Geraldi Pradana asked two questions, but I think we can make it in one session. Does bigger land size still become important product attribute for consumer consideration in West Corridor, since the housing trend recap said before in 2019 to 2020, land size trend become, probably smaller size instead of the bigger land size. What do you think, Ibu Monica?
Okay, thank you, Pak. So basically, we believe that to be able to get the young buyers, the size of the building or the house should be compact. This is also will relate also to the land size. Why? Because the land size is getting higher and higher, even in the especially also in the Western Corridor. So that's why, although maybe consumers still prefer to have big land, but in terms of pricing, it would be limited to the compact houses, either in the building size and also in the land size.
Okay, Bu. And what about the 2-story versus 1-story, Bu? Which one will be much more interesting? Attractive.
This is related to the size here, because since the land size is quite small, so that's why one of the solutions to provide like comfortable size of the house, then they will provide like 2-story. So currently it's more and more houses are provided in 2-story type.
Okay, thank you, Ibu Monica. And we're moving on to office sector. Pak Bagus, Pak Darmawan Halim asked a question. Are the office inquiries that we received, colliers received, comes from new inquiry or relocation? If most of the inquiry comes from the relocation and only small inquiry amount of technology-based industry, then the net demand inquiry might not as attractive as it is. then the real market situation might not recover yet and still downturn. Your thoughts, Pak Bagus?
Yeah, thank you for the questions. The inquiries that we received for the last 2 months, as I mentioned early on, is actually a combination of new investment, which is not much, but there is new investment. Surprise, surprise, and renewable energy start to come in, which we actually projected. And then expansion. So existing companies that already present in Jakarta with with few small space, and they enlarge, they expanded. So that means they require more space. And then also we see expansion in the form of consolidation as well. We see those inquiries as well. And on the other hand, we also see companies, due to COVID, working from home, reduce the space. So it's combination of those two, whether or not at the end of the day is going to give net demand good net demand or not. What I'm trying to say here is that when the COVID started hitting March 2020 until like second quarter 2021, the activity of relocation is not much. There are some activity, but not many because of the global uncertainty. A lot of companies are trying to adjust. But right now we start seeing those confident come back. So whether or not net demand is good or not, we should focus more on the confidence level of the companies going up. So that means companies start to expand. So it will likely to continue in 2022. And then we start also seeing new investment. So hopefully when new investment, when the stability is there, right, the new investment will come. So start with small and then it'll grow bigger. And then we hope that what it says by Oxford, GDP will be up to 6.8% in 2022. If that happens, so you could imagine the demand for office space will also continue to grow, because property in general, as we all believe and agree, is that it is in line with the GDP growth. So the demand for the property market, also office, is in line with the GDP growth. So that's what I'm trying to tell the audience here. Yes, supply continues to be a lot, as you can see early on, right? About 380,000 square meter in 2022 alone, and then just small 170,000 in 2023. So 24, 25, I don't foresee any more supply coming into the market, because I don't think any developers would develop building on a speculative basis as like what it was before. So that's when the office market will start to come back, beginning of 2024, because supply will stop and then demand will continue to grow 6.8% 2022, 6-point-something% 2023. So those demand will catch up with the offer supply, and then 2024, 2025 will get better. So that's what I'm trying to explain here to Pak Darmawan. Yeah. Thank you.
Thank you, Pak. On that note, what is the pricing strategy that you would suggest for office space?
I think I would rather ask the question on the occupancy. So pricing should be flexible. Pricing should be flexible. So occupancy should be the aim and the focus. Because when you run the office building, right, you need to gain as high occupancy as possible, at least 70% occupancy, in order to cover your 100% operating costs. So flexibility that I mentioned early on includes the price flexibility as well.
Thank you, Pak Bagus, for the insights. Now we're moving on to the retail sector. Sender, Bapak Emil Arifin asks, what is the average retail price and also average rental for anchor tenant for outer Jakarta? So retail price for outer Jakarta and rental for anchor tenant in Jakarta.
Okay, outer Jakarta is Jabodetabek or Bodetabek or
Probably for anchor tenant is for Jakarta, and then for average rental retail price is outside of Jakarta. So
okay.
only the Jakarta, yeah.
Well, I have the numbers for Jakarta and Bodetabek. I think in Jakarta it's about 560 or a little over 560,000 per square meter, which is over all the great malls, the different grades, and it's also for specialty stores.
Okay.
Yeah, that's for Jakarta, and then for Bodetabek, I think it's 380,000 or a little over 380,000 per square meter. And that's also over all the different great malls. So it's an average number for specialty stores. And for anchors, that's obviously lower. And it differs how much space they actually need. But I would say it's somewhere between 75,000 and 200,000 per square meter per month for anchor tenants, depending on the actual size that they're taking up and the type of brand that it is, etc.
Okay. Okay, thank you, Sander. And then the second question from Pak Henry Sutandinata. How is the future for mall business or shopping centers has changed towards online shopping? And what malls has to do to survive in the future? That's
a question of that's something that's been discussed, I think, in the retail world for quite some time now. I think if you look at Indonesia or Jakarta, you know, the competition is very fierce here. There's many malls, and I guess as a mall, you want to have the competitive edge. Yeah, so you need to keep investing in your center to remain to be dominant in your trade area. And maybe, you know, the main thing I guess that's being discussed is that you want to offer more than just a traditional shopping experience. So you really have to look at the type of consumers, I think, that visit your mall and what they need and what they want. And based on that, invest in your mall and come up with new concepts. But it goes away from traditional shopping. We see that the larger percentage of occupancy of malls is going to experience an F&B outlet. So before, years ago, it was around 20-25%. That's over 30% now. And so you see really a shift towards more experience in F&B in malls. But I think the main thing is you need to stay relevant and look at your tenancy mix and come up with new brands if possible. Invest in your mall to make sure you stay on top, I guess. But it differs per center, of course. Every shopping center has a different situation. Some of them are already top of the market. Others are trying to get there or have a lower grade. So it's on a per asset basis, it differs.
Okay, thank you, Sander. Thank you. And then we're moving on to Pak Rifan for industrial and logistics sector. Pak Rifan, Bapak Iskandar Rares asked a question. For industrial sector, kindly advise the main factors that encourage manufacturer investors to invest in Indonesia and in which provinces are the most in demand?
Yeah, I think the most important thing is the price, the land price, because as we all know that in 2010, actually the market become double, triple, of the price before. So actually, somehow if you compare with other countries such as like Vietnam, actually our price is quite high, compared to them. So I think price is the key, and then which province is the good one is it. I guess it depends on the industry. If you are is in the labor intensive, Central Java will be the best because of the minimum wage. But if you would like to have a good infrastructure, well established, it's probably Cikarang and Karawang area is the area for the investment. I think that's for me.
Okay, and what about the special economic zone, Pak? Is it going to be beneficial, fiscal or non-fiscal, to attract manufacturer investor?
Yeah, of course. I think the special economic zone is one of the benefit, which is for certain industry, government is actually give a special treatment, like a tax holiday and everything. So this is also actually it depends on the government as well to make the industrial market in Indonesia is more competitive compared to the other countries in the region.
Okay, thank you, Pak. One more for Pak Fakih Hidayat asked a question. What are the basic requirements for data center in terms of location, building, infrastructure, and others, Pak?
Yeah, for data center, the basic one is you should have like two sources of power supply, and then it should be reliable, and then also the capacity of the electricity should be enough because the data center can grow fast. And the other thing is the data connection. It should be good because some of the internet connection is not so good in several areas. So the best one will be located close to what the data center is already established, especially the cloud data center, the hyperscale data center, which is they already have the, the area is already proven for operation of data center.
Okay, thank you, Pak Rifan.
Thank you.
Thank you. And to our last question for Pak Satria, hospitality. Pak Satria, with the return of the travel restriction, when can we expect recovery in Indonesia tourism or hospitality properties?
Without any hiccups and any other waves, we are expecting that in 2023 we will achieve the whole numbers that we have been enjoying in the 2018 and 19. But in fact, if we are aware, Jakarta and Jabodetabek actually last month and this month is enjoying the same volume that we have been enjoying for in 2019 in terms of volume. But in terms of rates, as we have been presented earlier, actually, it won't come as early as the volume. We are expecting if the volume is there, then the rate will be step by step recovered, and it might be settled in the fastest is in the early of 2025. Those are the rate that we are enjoying in 2019. We will only enjoy in 2025. Anti?
Yes, Pak. Thank you for the answer. Sorry, I forgot to mention a question about the apartment sector, Pak Steve Atherton. We'll go back to apartment sector. A question from Ibu Eva Yuliandari, Pak Steve. It was previously mentioned that there will be an expected growth of confidence start from 2022 for apartment starter title market. What is the critical or main factor which predicted the boost the demand next year, Pak Steve? Steve, sorry, you're still on mute. Okay, sorry, Pak.
Yeah, thanks, Auntie. I would say the main factors for expectation for vibrancy and healthier investment in the apartment market is predominantly around people getting back to work. And people getting back to work means they have to move around, and the travel patterns and the commutes and the level of convenience or inconvenience people are willing to live with, we think will have a big impact on demand for apartments. Also, that's got to be married with just consumer confidence in general, that the economy trajectory is going well, the global health concern is managed, and we can get back to a certain comfort level about normalcy about life. So we think those will all work together to boost the apartment sector, and people will get past this wait and see, sit on their hands kind of attitude and be ready to move on. And people have also, not spent a lot of money these last 2 years. They haven't gone on long trips. They haven't been buying properties. So we think there's some pretty serious pent-up demand as well.
Okay, thank you, Pak Steve. The last question will wrap up our session for today. Thank you, everyone, for staying. We know it's very late in the afternoon, but thank you for listening to our webinar. And don't forget, we will send out the link to access to the recorded webinar along with the presentation slides tomorrow. Please. Probably our expert will need quite some time to answer to your question, but we'll make sure that everyone who have raised a question get answered by our expert, and we'll send you through email. We have the survey ready after you end this webinar. We appreciate your time. If you have time to fill in the form so we can enhance our next webinar. Also, we're open to any topics. If you would like to for us to cover any property related topics for a webinar session, please feel free to suggest, and we'll try to cover those topics also. So thank you everyone for the great session today. Thank you for our speakers. Thank you for our participants. We'll see you probably in July next year. Thank you everyone. Bye-bye. Good afternoon.
Thank you.